Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable where we talk about current market conditions, see opportunities in the market, trading stock, options, ETF, futures, and answer any questions you might have. This is my brief bio. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are very important. I'm going to go through specific trade ideas, so it's important to look at the disclosures. I encourage you to visit optionsclearing.com to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. All right, let's take a look at the market. And my goal is to make sure that I answer any questions you might have. So if you have questions, please enter them. And I will get to them as soon as I can. So after, one observation is that volatility has subsided significantly. VIX went from 60 all the way to 17 in a short period of time. There is a lot more clarity in terms of the tariffs, the amount. There was 90-day pause on tariffs for China, pause on tariffs from European Union. There agreement made with Britain, India, Japan is next. So market may basically recovered all of the losses to, I think, turning positive actually for this year. So spiders are turning flat, slightly positive for the year. Continue to grind higher. We're above 50-day moving average, above 200-day moving average. We're above the November lows and January, February lows, which is bullish for the market. So what's next, right? Interest rates, right? If you look at the 10-year interest rates, that are stable around 4.3, right? No new signal, which is bullish for the market. Dollar also stabilized. We did drop below 100 for a couple of weeks, but now we're trading above 100, so that's positive. VIX is 17 handle. Small cap, so broadening of the market participation. Small cap, mid caps are joining the rebound as well. And along with high beta stocks like ARK Innovation or QQQ. Bitcoin is at all-time high, right? Trying to break out, retesting all-time high, and crude oil pullback, which is also positive on potential agreement between the United States and Iran on nuclear deal. So that's also positive. So if you look at our model, right, stock forecast toolbox model. If you look at the model for the next 10 days, you can see that the momentum is actually turning positive. There is a lot of positioning at 600 level on S&P, SPY, SPX 6000 level, which I think market is going to get sooner than later, right? Maybe today, maybe next week. We'll see. I think we had CPI data, PPI data, so next catalyst is probably NVIDIA earnings. I mean, macroeconomic data, a lot of market participants will scrutinize the macroeconomic data to see if they can resolve the discrepancy between the soft leading indicators, surveys versus hard economic data. Kind of a tale of two cities, right? They're divergent. At some point they will converge, but for now they're divergent. Or NVIDIA earnings. For the most part, earnings are behind us. June has been, at least for the past couple years, has been strong months. Usually there's a saying, sell in May and go away, but that kind of didn't work in the past few years. So I think market is going to grind higher to 600, positive trend. I would not be surprised to see 600 or even retest of all-time highs as we are finishing the May, right? And we have this positive momentum going forward. On the downside, I would be a buyer. I would not chase the market at these levels, but if we do pull back to 580 or 565, I think those are the two main support levels. I would be a buyer. So this is a short-term interpretation for the model. Long-term model basically saying that, based on the April sell-off, we shouldn't be much higher than 565 level. We're already at 590. So we're overshot on the downside in March. April, we overshot in May on the upside. model is basically saying neutral. I mean, yeah, 585, 590, we could get there. We're obviously at 590 level, maybe 600, but you can see the further, it doesn't mean we cannot go high, but it does mean that we are approaching these overbought conditions on short term, medium term, that potentially we need a pullback. I still think between now and October, we will retest the lows. Model is also seeing that it is possible to retest 500, using the same playbook as in 2018, that during the first Trump administration, that at some point, as 90 days come to an end, probably, China is not going to deliver everything that the United States expect, and escalation again of tariffs, and we'll probably maybe not retest the lows, but come close to the lows. So I would be cautiously optimistic as we approach in summer. And usually August, September has been very bearish months in the past few years. So I think that trend will continue. Any questions? Robert, welcome back. Thank you for joining again. So let's look at gamma exposure, right? Why is gamma exposure? This shows basically going back to game theory, right? It doesn't matter what I think. What matters is what market participant thinks. And that could be one way to look at the futures data, look at the options data, and what contracts people are buying. So you can see clearly from this diagram, 6,000. Already 25 points above your model high for me. Yes, Robert. Model is trained on data, right? We don't have a lot of examples in the past 100 years where VIX goes to 60 and goes back to 17 in a matter of 30 days. So very hard to train on that data. It's impossible. I would say it's impossible to train on this data, and that's why you see these adjustments. Model works well when the volatility is in certain range. Historical range, right? Somewhere between 15, 25, 30, right? Those are historical moves, and models doing a good job finding these ranges. When VIX moves to 60 and then back to 17 in short period of time, you can't really train the model on that data. But as of right now, the positioning does show you that at 6,000, there's a lot of overhead resistance. We call it call wall, right? Accumulation of all the calls is acting as a wall. Basically, market is going to have a hard time breaking through the 6,000. Right now we're at 5,900, right? So 5,900 is your support, 6,000 is your overhead resistance. We're already done with May. So please close your May positions today. We have monthly expiration, so that could create some short-term volatility in the market. But let's look at June and July expirations, right? In terms of, so a lot of gamma is going to come out, right? So a lot of May gamma is going to go out. These option contracts will expire. You still have June, and then let's see how much is in July contracts. People are basically rolling their positions from May to June, July. So you can see for now, not a lot of positioning in July, right? Not a lot of position in July. Most of the positions are in June. Okay. So based on, and trading is about probability, right? You look at the distribution curve and seeing, one standard deviation move, two standard deviation move in the market. So let's look at the basically supply and demand for the options data. You can actually see potentially break on the positive news. Let's say Nvidia delivers strong earnings. Let's say hard economic data continues to show that there is no signs of recession, or there is no signs of comeback of inflation, that we could be at 6,100, 6,200, so all-time highs, right? So scenario number one, we're trading above that level, two standard deviation move to the upside, right? Two sigma move. Scenario number two, we're trading basically in this range that market predicted, right? So not the market predicted, but supply and demand for the option contracts, somewhere between 5,700 and 6,100. So that's scenario number two. And scenario number three, two standard deviation move to the downside. Basically, either escalation of the tariffs, maybe the Trump administration is not going to wait 90 days, maybe they're going to start sooner, right, ratcheting up the rhetoric. Maybe there is, escalation in Middle East between the United States and Iran, right? Maybe inflation data comes back up. So then you have some kind of a negative, net negative, I would say, black swan event to cause 2 standard deviation move to the downside. So that's basically, kind of, if you want to look at a distribution of possible outcomes, and the question is, what do you think is going to trade? Obviously, if you think 1, then this is when you start deploying your cash and you add to your position. If you think 3, you aggressively start raising cash, right? If you say 2, then as you're approaching 6,000, 6,100, you sell, and if you're approaching 5,800, 5,700, you buy, right? That's how you would look at the allocation of your capital. So how many of you say 1? Type in 1 if you think we're going to move more than 1 standard deviation to the right between now and July. Right? Now we're talking about the start of the next earnings season in July. How many of you say 2? No, we're just going to trade, in the belly of this curve, right in the middle, most of the time, between now and July. And 3, we're going 2 standard deviation down. 1, Robert, thank you. Andre, 2. Okay, so most of you said 2, which makes sense, right? If you go back to your high school statistics, the idea is that usually the distribution of different outcomes, within 1 standard deviation, right? And I agree with that. I'm going to go with 2 as well. I do think we can potentially get to all-time highs similar to 2018, right? 2018, we actually made new highs before August, but marginal, kind of slow grind to the upside. And then the pullback, right? There's still risk, still 10% tariffs across all countries. And at some point, just like Walmart announced that they're raising prices, I think more companies will follow, right? So inflationary pressures will increase between now and, let's say, September. And that's why I think as you approach in 600, 610, you probably want to think about raising cash, right, and taking less risk. But short term, I think the bulls are in control. So, if you do sell, I would be a buyer into the pullbacks. 580, I think, is a good entry price. 570 is even better. Any questions? Yeah, he put some Chinese stocks. Kevin, okay. Michael Bear, he was right during the global financial crisis, but he, just keep in mind, he almost went bankrupt as well, right? So predicting these events is great. Timing them is very difficult, right? By definition, black swan events, it's hard to predict the timing. So just, you have to make sure that you have ample of cash and you stay liquid, right? Don't buy on margin, irrelevant of what your opinion is, right? Because, I might be confident that we're going to revisit the lows, but I have no idea is it going to happen in the next couple of months or maybe in the next couple of years, right? That I do not know. So it's a different type of trading, right? Different type of trading. This is kind of a more long-term fundamental opinion on the market, and then you just keep pushing your opinion. If eventually you're right and you don't run out of money, then great. But something to keep in mind. Okay, so how do we help at Tradespoon? You can see we do have models, right? So we have different models that analyze stock price action, volume, it trains on the data, makes forward prediction. So I went over stock forecast toolbox. You have different time horizon, 1 hour prediction, 10-day, 6 months prediction. Great model to show you where the range that the stock market can trade. And you can see, obviously, what used to be a overhead resistance is now support, right? So I think there's only small probability for the market to break below 565 in the months of, May, June, right? Based on this data. But it also shows you that you also have a chance that we might revisit the 500, 520 level as well. So that stock forecast toolbox. It gives you model grade, how accurately it has been predicting the range, and suggested entry and exit points, right? For trading, even short-term trade, it's very important, right? If we get to 600, you're probably too late buying, right? You want to be conservative. But if we do pull back to 582, 585, I think that's a good entry point. For short-term trading, you can see market has been volatile. It's pretty wide range, right? 2-3% wide range between the buy zone and the sell zone. So optimizing your entry points for entering position and exit position could be a huge difference, right? If you look at the compounding investment and how it accumulates over months over months, year over year, if you can save 0.5%, 1% on every entry and exit point, that can be a huge performance boost in your portfolio. You can enter symbols that you're looking for, like today, Deer, Marriott, OK, or some of the signals from today. You can enter them. It's same thing. It will tell you what the suggested entry point and the exit point. Let's say Deer, right? Deer had earnings. It's making new highs, right? It's breaking out. Model detected this. Okay, you have a breakout. If you want to, industrials have been outperforming the general equity market. And the high beta market, so maybe stocks like General Electric, Deere is one place to look for opportunities. And again, 544 probably overdone. 516 is, you might want to consider entering Deere. So you can enter these stocks and look at your own portfolio, and you can look at the company screener, right? Which sectors the model sees in strong uptrend. So some of the internet stocks, some of the insurance companies have been in strong metals and miners have been in strong uptrend. So you basically, the higher the number, the higher the monthly momentum. Keep in mind, all the monthly predictions, model has to train on monthly data. So we need full data point to be complete. So the model runs only on the first of each month, right? So all of this data as of May 1st, and then June 1st, it will run again and make longer term prediction again for the company screener and for the long-term predictions. The daily predictions are, each data point is 1 day. So that's stock forecast toolbox. Based on that model and some of the other models, we have 3 services where you can just look at the results of the model, right? Top 3 ideas, bullish and bearish. So in active trader, for today, model runs every day. Based on the price action, volume action, it gives you prediction. So we talked about Deere, right? If you see at 516, then that would be the entry point, right? Today, if you bought at 516, then right now it's 527, right? So you buy it for 516 and you exit at 521. You're looking for 1% move in the underlying stock. Right? So 1% move to the upside, 1% to the downside, and you split your entry into 2. Right? And some of the nodes in general, especially if you're new, start with only 4 positions at a time and not to risk more than 2.5% of account value per position. So that's something that I would encourage you to consider as well. Any questions? And these are the trade ideas or signals that the model has generated that I'm using to trade in my own account. Right? You can see it in the lead circle. So active trader is aggressive, geared toward aggressive trader, where signals are generated on a daily basis. Weekly trader and monthly trader, these are longer term signals and generated on every Sunday, right? So these are long-term signals where you hold the position maybe a couple of weeks, maybe a couple of months. So one example was General Electric, right? On Monday, General Electric signal was generated. Monday was what? Drawing blank. 12th, right? So on 12th, model generated signal General Electric. If you buy General Electric on Monday morning, you entered either 210 or 215, right? As of Friday's close price, and at this point, on weekly traders looking for 2.5% move. So at 215, you would exit. And it's trading at 228. So that's an example of medium term or longer term signals. A lot of people ask, well, can I trade credit put spreads? Can I trade butterflies? I mean, you can trade any option strategies on these signals, right? I mean, we're giving you bullish signal, and then you can buy stock, you can buy single call, you can buy spreads. They all different strategies have different, advantages and disadvantages. So that's something to keep in mind. So that's weekly and monthly trading. So these are the tools that you can subscribe to, and will help you navigate market volatility. Any questions? Andre, BJ, Ed, Jim, Kevin, Lalit, Robert, Simon, Michael, Steve, Fred, Bob, welcome back. All right. Thank you, Kevin. All right, Kevin, thank you for your thoughts. Appreciate them. All right, I'm not going to repeat them out loud, but okay. What else? Okay, so these are the signals, right? But you would have to manage them on your own, right? If you want to see what Keith and I trade in live trading room, we do have live trading room every morning and every first hour of the trading session and the last hour of trading session. So you can participate live. If you're busy and you have other commitments, there's a recording. You can watch the recording of these sessions, and then you can enter your phone number to get SMS message. Right? You can get a text message for every time I trade. So some of the examples from today, Royal Caribbean, right? This was a short-term signal generated on Monday. I entered the stock on Monday and exited yesterday and today. Was able to capture about 2% move in Royal Caribbean. So this is an example of a stock trade. Right? And then the other trade was Cisco. Cisco announced earnings. This is an example where I trade options and you're taking a well-defined risk, right? So on Cisco, I did the calendar spread, right? I did a calendar spread and risk 13 cents, right? So if Cisco, it was the idea that Cisco, is concentrating, specializing in network infrastructure for Fortune 500 companies, has a lot of exposure to AI theme, and if they had a positive surprise that the stock could move at least one standard deviation. So I was risking 13 cents. The stock did actually move exactly to the strike price I selected, 65 strike. And this is an example where there was a 100% return, 200% return in a short period of time using options. Obviously, in terms of probability, these are low probability trades, but it's a high return on investment, right? If the stock does, if Cisco delivers on their earnings and their momentum continues to the upside, then you can risk 13 cents to make 27, 37, 57. So that's an example of option trades. So I try to do both stock and option trades because we have different types of traders. And these are example of some of the trades that happened in the past few days. You can always see all of my trades. You can see all of my positions. You can enter a phone number and sign up for SMS messages so you can follow us on Discord. Okay, closing the bell. Any questions? All right, so that's Elite Circle. We do have a YouTube channel, so every Wednesday you can join us for live discussion of market and trade ideas. We also post videos, so find the word Tradespoon on YouTube and just follow us on YouTube. There's a lot of free educational content, right? So we have Getting Started Guide. You have Learning Center if you want to learn on technical analysis, options trading, basic options, advanced options, portfolio management, trade management. There are a lot of libraries. There's a library of a lot of videos that you can find on the website as well. We also have a newsletter where every Monday and Tuesday, Thursday, we deliver either a short video or a blog, which you can also participate.
You got diet. You got water.
All right.
I looked again.
Any other questions?
said we charge you $5 for that. Okay.
That's how much
I was
that
gonna-
would cost, but did you look in like?
Didn't see any before. Robert, okay. I appreciate for your feedback. Yeah, these are just in addition to, I know your live trading room, I spend most of the time trading, right? On these Friday session, I spend most of my time just explaining the site, the market conditions, and what you can find. I do have a premium portfolio where I only trade option spreads. A lot of people say, Vlad, I don't trade stocks, I only trade options, or vice versa. Vlad, I only trade stocks, I don't trade options. So we have stock-only portfolio, robo-investor. We have option spreads portfolio, premium portfolio. And then Elite Circle, you see everything, right? You can see all of my orders, all of my positions, enter your phone number. Are options and future used much by traders? Are they cost effective? I do like options and futures because futures, the problem with futures and the advantages of futures is that you get a lot of leverage. But the futures are open 24/7, and if most people want to sleep at night. So for that reason, I would propose if you are dwelling to the futures, you use either merit put or merit call. What does it mean? Is that you basically buy an merit put, you buy an option, right? You buy and put. You could buy put on stock, you can buy put on ETF, you can buy put on futures. So if you buy an S&P mini futures, you can buy the option on S&P mini futures. And then you know what is your maximum risk, right? You can sleep at night, you know exactly what your risk is, you're gonna make sure it's less than 2.5%. And then you buy the futures, right? S&P mini, or you can buy cattle, corn, I don't know, treasuries, gold. Gives you a lot of leverage, but you have a put and you have a stock position. If you're long and if you're short, you have a merit call, right? You buy in a call because you think market is not going to break 6,000, right? So you buy 6,000, let's say call, but you think market is going to sell off, so you sell, you sell your future contracts. So same idea as what we're doing, right, with stock and option, but a lot more leverage, right? If you have a smaller portfolio and you need leverage, then a lot of people gravitate towards futures market. But just keep in mind, S&P futures, SPX and SPY, they're one-to-one correlation, right? They move in the same nature.
We have a dinner reservation at 7, I think.
Stock market, I see how it is. Walmart actually did not miss earnings. I think they did well. They just warned about that they're going to raise prices, right? How's Walmart actually doing? Deer was a great signal, Walmart. Yeah, so it's grinding higher, right? It's actually net higher. So, and they also say this is more of electronic products and they're attracting higher end consumers, right? That can spend more. Because people are a lot more conscious now and they are concerned about rising inflation. So a lot more people gravitate toward Walmart. So I think the earnings are decent. Obviously, they were concerned about. Sorry about this, but overall, I think it's fine. I do not follow Jim Cramer. I know who Jim Cramer. When I was, starting, I read some of his books, but I don't follow Jim Cramer. A little bit different type of strategy. He's more of a fundamental analysis. I mean, he respects technical analysis. He thinks everybody should know about technical analysis, but he makes decisions based on the fundamentals for the most part. I make most of my decisions for the most technical part, and especially in the current market when VIX goes to 60 to 17, we are in the trader's market, right? It's very hard to make a decision based on fundamental analysis, unless you're a value investor, right? You're Warren Buffett, you see opportunity and you value investing and you hold the position for a long time. Just took Walmart profits. Very nice, Robert. Great trade. Good for you. This is great. Yeah, nice rebound in Walmart as well. I'm still waiting for the 103, 105 range. But, I have till next Friday, so we'll see what happens. All right, guys, I do have to go. It's my daughter's graduation. So wish me luck. I'm super excited. And I will see you. Keith will do the closing bell, and I will see you Monday morning. You guys are awesome. Thank you for participation. It means a lot to me. Andre, DJ, Ed, Kevin, Lily, Robert, Simon, Steve, Michael, Jen. Thank you very much and have a great day.